Hello, fellow traders. 'Tis I, the rumpled one. It is Thursday, December the 21st, the year 2017. More price action. Let's just jump right into it. For those of you who are tuning in for the first time, simple money and risk management. Risk. Dollars or percent you're willing to lose per trade. Position size is risk divided by stop loss, or stop loss is risk divided by position size. So when you want to know where do you place your stop loss, this is how you figure it out. And once again, looking at the weekly chart, you can see we had a lot of action here during the week. Right now, we've got the Swiss franc 21 pips above the weekly open. If we look at it on a daily, we can see it broke across yesterday's high. Nice gain there. Very simple stuff. Just trading the breakout here. Looking at the buy zone, you can see here you came in here, took some heat, and if you were staying in the trade, if you didn't exit here when you finally could escape, I don't know what to tell you. Because if you sat in the trade all this time, because this is hours, it's like time to get out. But see here, the past 4 hours, 3.5, it paid off to the upside, and here you see that weekly open cross. Gone in here, maybe went the other way, saw it coming back, exited, take the crossover again, and there you have it. Sometimes people will ask, well, when do you know when to take the 2 pips versus 20, and I don't want to risk 20 and I'm only making 2? Well, you see, you just don't really know. So right here, you're looking at this. This is H1. You know, we can drop on down to M5 and see what that price action looked like at the M5 chart. But it's pretty much the same thing. Let's why is this running so slow today? So you see here, you got the weekly open. Right here, it's a price action. You see, you got a bull candle followed by a bear. You see it came through this wick. Maybe make it a little bit bigger. Came back through this wick. Open, broke there, right there. It's like, nope. If anything, it's time to reverse. Then you see here, you've got a bear candle followed by a bull candle going back to the open. Break right here, you're out again, or maybe here, depending on which time. Okay, here you go, you're coming back in. You can see here it tested, it came back through. If you wanted to take that trade, price action again. You see here it's coming back the other way, breaks that high. You can just basically scratch that trade too. You see here you got a nice clean ride. Once again, you've got the price action trade here. Bear, another bear break, what we call the rat reversal. Bam, you're out. Take the pips. Here you go. It tested it, went back, comes back again. You see, using a 3-level ZZ, it's telling you, hey, these are possible turning points or inflection points. Got the crossover, you jump in. You see here, you had a push down, a push back up. It's coming back down, telling you what? There's more buyers down here, or there's more, or there's, you know, a lot of supply there, pushing it back down if you want to talk about supply and demand. But I just look at simple price action. Made a new high, cut across this high, cut across this high. Time to get out of the trade. Take your money. Back here, same thing. Right here, live. You see it. It failed to make a new high, price action. right there. It broke that low. It broke that low. That's live, people, live. So you just trade that price action, and that'll tell you when you take a couple of pips or when you take the lion's share. It's, you know, I don't know how to make it any simpler. I mean, you know, you don't need a squiggly line. No squiggly line indicators were harmed during the making of this video. Actually, I'm thinking about making a disclaimer chart for that, but the screen's getting pretty filled up. Anyway, let's continue. So I hope that answers that question. You see here how to trade that weekly open. Yeah, sometimes, you know, you're in and out. You're protecting. I mean, a 1 pip wins better than any loss any day, anytime. And you can see here we've got the rat reversal set up. You get the rat zone here, came out here, right there. You see it's pushed up. It's like, if it's going against you, just take the pip. Okay, so what? You take 1 pip, it turns right back around and runs for 20. Who cares? You know, you just, sometimes that's just the way it works out. But that one time when you don't take the 1 pip and you're looking at minus 20, you're going to remember. Okay, looking at the pivot points, as you can see, price filled the pivot, hung around the pivot, and headed up to R1. Okay, these are the daily pivots. Okay, you can see here, here's the daily R2. I usually put this on H4 because then you can see there's the weekly S1. There's your monthly open. Here's your weekly pivot right here. So it's hanging around the weekly pivot right now, and weekly R1 is up there. Once again, the simple price action screen I set up. I've got the higher high, higher lows. You can see here on the lower time frames it's making lower lows. Turn trades, you've got price action says going down. I mean, that's why I just sometimes almost just trade by colors. But you can see here, you can do this, you know, pen and paper checklist type of thing. Okay, do we have a green followed by a red? Yes, we do. Okay, so now we have a red followed by a green. Okay, you could have taken that trade right there, but it would only been good for a couple of pips. If you set that one out, you can see here it's making lower highs. So it's almost like, why would you even consider going long unless you just really believe for some reason price is going to continue up. And we're looking at the M5, but you know, maybe some people go, you know, that's noise. Well, we've already had that discussion, I believe. But for those of you who don't know it, the only true chart is a 1 tick chart. Everything else is data compression, either compressed by minutes or tick bars, but it's all data compression. That's how you get your high and your low and your open and your close based on that data compression. So all of this is, you're just looking at, you know, data compression, an hour's worth of ticks. So if ticks are, if anything below 1 hour is noise, then if you have a bunch of noise, then that means an hour's noise, because a bunch of noise doesn't make something that's not noise. I mean, you know, logically, it just doesn't make sense when you really analyze what some people say and believe. It just makes no sense at all. It's nonsense. Okay, enough of that. Back here, price action trade. So you can see right here, higher high, higher low, higher high, higher low, higher high, higher low. You could sit out, or you could take your money off the trade, off the table. You have to decide. It's a red H1. Rule of thumb, do not trade against the H1 candle color. So since you are long, you should be out. Another reason to be out right there, that's the highest open. It came up and made a new high, crossed below that highest open. That's a holo trade, highest open, lowest open. You are out of that trade. Whoops, why did that do that? Okay, just looking at the simple 5 lines from yesterday's daily candle, you can see the break. You can see here entering that wick zone. Well, if I'm going to say wick zone, might as well look at the wick zone. In the wick zone, out, in and out, in and out. You know, in and out. That's just the way it works. Price does not like to stay within the wick zones. And looking at, we talked about the holo. There it is. Highest open, lowest H1 open for the day. When I originally did holo, I believe I was looking at a daily chart. And so you can get an idea if you look at a daily chart. When you look at the highest open on the screen and the lowest open, you can say, okay, yeah, price is moving between there. So if price is making a highest open and then price reverses through, maybe I can take that buy zone or daily open crossover and really make some money. That's just what happens when you have sat in front of the chart for decades and you just start to see things. Then you can run your statistics, your analysis, and see that it works. Now, yesterday I talked about an indicator that a friend of mine asked me if I had. And what he wants to do is, what he wanted to do was look at the previous 7 candles and make like a synthetic candle. So I had this indicator, the L2 box. I'm gonna have to rename it because that's not what it does, and so and I'll have to put this back to the original. So I've enhanced it a little bit further than what he asked for. He wanted to look at the previous 7 bars. So before I had just 7, but I said no, somebody's gonna say I want to be able to start like 2 bars ago and end like you know, at bar number 2 or bar number 3, and I want to end here. So to get his, you go 1 and 8. And what that'll do is it will put up, it'll shade the zones. Then he asked me, can I do wick zones on a synthetic candle? It's just like, I go, yeah, you just take the open here and then the close here, and then you get your wick zones. And as you can see, you know, this was a very skinny wick zone, but this was, you know, there's a nice zone. So, but once again, it's price action type trading. I guess he was doing some kind of statistics by hand. I don't really know, but I just did that just because he asked me, and it sounded kind of interesting. I don't just do or just code whatever. I don't know if you can really see that shading. I think I might want to change something. Shade color. Let's make this, let's make it, no, let's do it. Let's do saddle brown. Okay, now you can see it a little bit better. So you can see the upper wick, the lower wick, and then the body of that synthetic candle. So once again, these are just simple crossover or breakout trades. Remember, just about every trade is a crossover because it's crossing over a price, and that's what your trigger is all about. So fellow traders, I hope you enjoyed a little price action discussion. I hope that helps. And oh, by the way, you can do this on different bars too. It doesn't necessarily have to be, or different time frames have to be the H1. So I hope you enjoyed that discussion about price action. And as always, fellow traders, it's not what you trade, it's how you trade it. The Rumpled One signing off to go drain the banks.